I don't know what's gotten into you, man. Is it just because it's summer and it's hot out that you're drinking ciders? Or is it like, why is it?
Yeah,
what happened?
it is.
Oh, okay.
That's really all it is.
So the Irish whiskey is just kind of on the bench right now because
at
it's...
night. No, that comes out at night.
Oh, gotcha.
During the day, I just need something refreshing. And
because there's
sun
there's
out.
40 minutes left in the trading session. That's why.
Absolutely. So when you're drunkenomical or econoholic, night starts at market close.
Oh wait, no wait. Which one is it? Is it drunkenomical? Drunkenomical starts at 3 when markets close. Econoholic starts at 8 after the extended trading session ends.
There we go. I like that. I really like that. I really like that.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
Hi guys, welcome back to Drunkenomics, the drinking podcast with an economics problem.
Yep.
I want to say, 9 months with like 2 interruptions?
Are we really counting anymore? Well, all the interruptions were all because of bets, which I have another proposal for you. But let's do the
all right.
Let's finish the intro first. And
so,
go from there.
By the power of the VIX, at 2367 during this trading session today, your most gracious host, James Goldwater, am joined by
me.
I mean, I'm just going to call you the other host.
I mean, what else does that make me? You're the more gracious host, and then there's me, and I am Aaron Wong. So glad to be drinking alongside all of you. Hopefully you have a nice stiff one, unless you're James Goldwater, then you're drinking a cider, because the market is still trading, it's still active.
Exactly. It's daytime.
To go?
Yeah, it's daytime. Look, hard, hard drinks like that, that's for the night, that's when the party's on, it's when work is done.
Well, and then there's me.
But, and then in between work right now.
That's very true. But yeah, VIX is at 2360. I lost track.
2367 is what it was, I think, when we started. So
yeah,
I'll call that. I mean, it still beats the...
Well, okay, so how about this? I got another bet for you.
Right, so
I'm curious,
what's the bet?
So here's the proposal that I mentioned earlier. QQQ, right, which is the Invesco ETF, which is supposed to kind of go along. It's supposed to kind of mimic the S&P 500, but I think it's much more tech heavy compared to the SPY, which is the State Street ETF. Yeah. So QQQ, I think, and I actually traded along this. I put out a trade that actually reflects what I think will happen. But in 1 month, QQQ will be under 300. That's my bet.
And it's trading just shy of 315 right now.
Yeah, it's about a 5% drawdown. I mean, my trade it's an options trade for September 16th, and I don't know. I might close out of it because I'm already ahead right now. Like, I'm already doing well in the trade. So I might close out of the position.
So for the purposes of our bet, we'll pretend that you're gonna carry it to term.
Yes, but
you may or may not. But for the purposes of our bet,
I have a put option.
QQQ will be under 300 on the 16th September.
Yes, at the
Friday,
end of close.
September 16th.
Yeah, I close. So when the Drunkenomists start drinking, that's
before the econoholics start.
Yeah,
the econoholics are still doing the after hours.
Yeah. Even though the options are trading after hours, but yeah.
That's another one that we've come up with, guys. So if you missed the preamble, if you skipped the preamble, if you ignored the preamble,
yeah, I mean,
why?
if you're already two shots in, then yeah, I mean, skip the preamble. But like, if you're warming up,
that's if you get time to get.
Yeah, I'm just saying. Yeah.
But we've decided that for Drunkenomists, the day is over, the trading day is over, right at market close. So at closing bell, all bets are off. Time to go wild, right? Yes. So if you're an econoholic, on the other hand, 8 o'clock Eastern, right? So you get the after hour session. So right, there's still work to be done.
Yep.
You can have you start. It's not straight to over. It's
got positions to manage.
It's that gray area, that phase out. It's like going to the gym and then cooling down instead of going to the gym and then stopping.
Oh gosh,
I don't know.
I think that
the only gym I go to is Jim Beam. So I think that's how it works.
Yeah, well, I think that really makes me a Drunkenomist because I'm the kind of guy that goes to the gym and I just stop. I
was going to say, like I said, the only gym I go to is Jim Beam, but the last time I was actually at a gym to exercise, it was all one big cool down. That's just how it goes.
I don't blame you at all, man. Life is too short, man. Life is too short. But yeah, QQQ 300. Want to do this? Okay, want to up the ante a little bit more? Let's do if it closes at any day below 300 from now until September 16th. If it closes below 300,
you get to be more gracious. For the episode for the immediately following that episode.
Yes.
I'll take that too.
Okay.
All right, here's the weird thing. I don't know why I'm going to go long on this. I don't know why I'm going to say no, that's not going to happen, because I'll be honest, I absolutely agree with you. I just have to take an adversary position.
Yeah, I know, exactly. That's what we do. Like, I mean, if I'm a drinkonomist, then you got to be the econoholic and vice versa, right? If you're, if you want to play the role of a drinkonomist, then boom, what am I going to do? I mean, what else?
Yeah.
So
I think, here's my thing. I think you're probably right, but I'll take the counter perspective just because.
Yeah, exactly. Why not? I mean, that's how you make it interesting.
And I'll be honest, if it goes above 330, if it goes above 335, no gracious host that week.
Okay.
Why? Why is this happening?
Because I feel like you support my trade. Like, you've been bearish. I've been bearish. We both been bearish.
Yesterday, so we're recording on the 23rd, Tuesday, but yesterday, Monday, so the 22nd, that made sense. Like that 600 down, the Dow is down 600.
No, I think it should have been 1,000 points, really, but whatever.
Oh, yeah. Hang on. It definitely should have been bigger, but I understand the downside. I understand it being down.
Yeah.
I said, I've listened to, as I hear all this optimistic news about markets, my response kind of every time is like, what's the basis for your optimism? And people are like, oh, well, it could have been worse. And I'm like, well, no one cuts off a limb and goes, good day, guys.
Well, this is my thing, as I think, what we saw on Friday, which Friday wasn't the best day in trading. It wasn't a terrible day, but it was down.
It's down a little bit. It wasn't.
So I'm looking at the SPX, right, which is the SP 500, not the Dow, so it's a little bit different.
Well, but I think Nasdaq and S&P are much better metrics.
100%. Dow is too. Well, even the Nasdaq is still really tech heavy, but
true.
Well, I guess SPX is too, so it's not really.
But what I'm saying is the two of those aren't price weighted. So Nasdaq and S&P aren't price weighted. It's like, okay, this is 2%, but it's not like a drastic number. Whereas like the Dow, it's like 3,000 points, and you're like,
yeah, but it's Google because it's Google is
one company. I
guess Google was $2,000.
One company having a bad day.
Well, but the thing is, like the Dow would be okay if Google had a bad day because Google's $2,000 a share and Google's down $200. If it's down $200, that's only a 10% drawdown, right? I mean, not only,
but it can drag the whole Dow with it.
Yeah, because it's price weighted. Whereas, like if Apple had a 10% drawdown, it's only $13. But it's price weighted. The Dow is not the SPX. SPX and Nasdaq are both market cap weighted. So if Apple's down 5%, that's going to pull down the Nasdaq and the SPX. So we're looking at the SPX on Friday. Opened 42.66, low 42.18.
Not insubstantial.
Yeah,
but not substantial either. It's not like
so. Yesterday, I mean, I think was a 2% decline in the SPX, which was 822 yesterday, and then today, for some reason, a green candle.
Yeah, like I said, Monday I woke up, I was watching, my phone beeped at me because I have CNBC on in the background almost all week, but I had the volume at a pretty low level because I was playing with the dogs, and well, yeah. I don't want them learning too much too fast, but
you don't want to spook them. Ignorance is bliss. So
exactly, no, they don't have to pay taxes. They don't have to. All they have to do is stay pretty and be cool, and it's working great for them. But yeah, no, the market was down 600, and or Dow was down 600, and all I could think to myself was like, well, yeah, okay. All it does is suggest that we both of us with our it's just a bear market bounce. This isn't the rally. This isn't us coming out. This is just a.
This is what I said last week too about the SPX hitting the 200, and not really the SPX, but like everything hitting the 200-day moving average. Like I said last week, big resistance. Well, or I guess it's one or the other, right? It's either going to be resistance or role reversal. And what I mean by role reversal is if it breaks through,
it's going on a tear.
Yeah, kind of like the old rule of technical analysis: former resistance becomes new support, right? So if it breaks through, so if it breaks through,
I talked about that with when Luke was on, not when he was me, but 2 times ago when Luke was on, we talked about Bitcoin and cryptocurrency and how that got there. And we were sitting here going, nah, it's going down, son. And he was like, well, it's probably going to hit this technical floor. Now, I do think it's funny that between then and now, he did, at least in private conversations, has said like, nah, I see Bitcoin going under 20.
Well, he's been on Fox Business several times going, hey man, honestly, if it reaches, I think one time he said 18, and I think it did reach 18. I don't really pay that close attention.
It got into the 18s, I remember that.
Yeah, exactly. I remember that too. But I don't know if it got down to 18, but he said around 18,000. Was
his next support level.
He
wasn't wrong. Like
we'll see.
I would say I think Luke's just a little more optimistic about.
I think he is too. Because let's be honest, like you're pretty pessimistic about it.
But most like I said last week, I guess that may be the difference between me and Luke is that he's a slightly more optimistic version.
Well,
of me.
I mean, but it's cyclical, right? I mean, you'll have your seasons where you're like very
right? When I get optimistic about things, it's like okay, sky's the limit. But my thing is, I need hard empirical data to see that it's coming down.
You need a good catalyst.
Yeah, I would need to see that like Australian iron and coal manufacturers have increased production and have filled all their sales, and that Mexican steel mills and foundries have been buying huge quantities of Australian iron and coal, and that they've been filling huge orders into the U.S. Then I'd be like, well, okay, that means that there's huge consumption, like that. It's been done. Now we just need to figure out who in the U.S. is buying it, because it's like that person is on a tear of expansion.
Yeah, but who could afford it right now, right? Because the cost of capital now is much more expensive. Not to mention, the discount rate. Really, like if you think about it, the discount rate for equities, 10-year went up above 3% again this last week. So now, how do you discount equities?
So that's why kind of a second ago we were talking it's either role reversal or a resistance point.
Yeah.
And the reason I would say that kind of where we're at is we're hitting resistance points, and I don't think there's going to be a role reversal yet, is purely because September starts next week.
Right. And what happens in September? What happens in September? What begins? I forget. Is it football season that begins, or is it something else?
No, football season starts this weekend.
College football season.
College football season. Now then, that's right. Yeah. Which I consider the start of football season.
Let's be honest. Okay,
preseason's already going.
Yeah, so it's sorry.
But okay, no.
So what's the thing?
But in the real news, in the real world, good news, bad news, quantitative tightening doubles down in September.
Yeah, because football's the fake world, and quantitative tightening is the real world. Just kidding.
It is.
I love football so much.
It is.
But yeah. But yeah, dude, no, absolutely.
I'm kind of excited for it to come back, for college to come back.
Well, hopefully, I mean, this is the thing. Like, I think the economy is much more prosperous in the fall because of football season. And football, let's be honest,
absolutely,
it's a sport.
Yeah,
it's the sport in America. So,
people have something to look forward to on the weekend. They have we got to buy. I mean,
we got to buy some
Doritos for the grill. We got to buy propane for the grill.
We got to buy Doritos. We got to buy Busch Light.
We got to buy soda. We've got to buy beer. We've got to buy more liquor. We've got to
buy brats.
And the great thing about the alcohol industry in general is when times are good,
as well,
people buy alcohol and drink.
Yeah.
When times are bad, people buy alcohol and drink.
Cheers to that.
And it's and the only difference, and I, really what we should do, you and I should do, is we should start an ETF that is just alcohol,
dude,
and that as we watch consumer, the substitute goods, right? So we're learning as like domestics decrease and crafts increase, we can kind of then predict, okay, no, times are good because people are spending more money on a smaller volume of alcohol, and it's when people are buying champagne, times are probably okay. But then as people start to phase into, they're starting to buy domestics again, and they're starting to buy
so that's your management
buying
thesis?
Jack Daniels and Jim Beam instead of Michter's and Elijah Craig.
So you're gonna rotate out of like Diageo and go into Brown Forman.
Yeah, and we're gonna cycle, and we're gonna cyclically just in the alcohols, just observing what consumer trends are in alcohol, and from that's a good prediction on the economy.
That's a really good ETF idea. So I mean, let's do this. I mean, let's come up with a plan for a redemption and creation process. Let's come up with a plan for an expense ratio,
we'll start obviously on paper.
Yeah, and what are we waiting for, man? No, I don't know. I have no idea. I don't know how ETFs. I don't know how to actually create ETFs, but that sounds like a great idea. Let's do it. I'm down, man.
I think it's eminently doable.
Yeah, I'll find out a little bit more at my new gig, so we'll see.
Yeah, I'll actually look at what information is available, what I can actually do.
This is the thing is what I want for an ETF is I don't want to do too many reorganizations because I don't want to screw over our ETF holders. I hate reorganizations. And the other thing too about our ETF that I really want is I want hopefully somehow higher dividend payout than expense ratio. That would be great. That's my goal.
Well, the great thing is,
that's my goal, but that's also my sales technique too. So higher dividend payout than expense ratio.
If you have dividends that exceed expenses, you can say, hey, you're not going to get all your dividend because your dividend's going to cover a lot of the expenses involved with this. So this is going to be very inexpensive. Exactly. But you're still going to get a penny out of it on top of the gain.
And as long as liquidity is not an issue, no reorganizations, no reverse splits, none of that.
We'll also no 3x, 5x.
Yeah, none of that.
You can't lever.
No way. 5x? What's a? Is there a 5x out there? I've never heard of a 5x, but I've seen
a lot of 3x.
I've seen 2 and 3x a lot, but I've never seen a 5x.
Well, the next logical conclusion is 5x. But
I can't even look. That's like Bill Huang. That's like China. Yeah. Speaking of China,
what's going on there? What isn't going on there?
What isn't going on? I mean, they're up to a lot of sketchy stuff. So
they decided they were gonna do new military exercises because a congressional party went after Nancy Pelosi. So that was good. Yeah. Definitely not going to royal markets. Definitely not a problem.
Definitely. But the other thing that I saw too was we joked about this a lot. all the doves here in the U.S. When I say doves, I mean like dovish, hawkish, as far as the Fed viewpoints. All the doves here, I thought they went extinct in the U.S. I thought they all got hunted.
I thought they did too. I thought the falconry out at Jackson Hole, the hawking,
just ate up all the doves. I thought they just feast.
I'll be honest,
just open season.
Kind of happy about that.
Cyclically, in this cycle, yes, but
for now,
yeah. Turns out I was wrong. Doves did not go extinct. They migrated to China. They found some sort of safe haven.
Well,
China.
Because they did.
What do they do? They slash rates over there. Why do they slash rates? Does it make you wonder?
Okay, they've slashed rates because the zero COVID policy in China is
right.
I mean, it is crushing to an economy.
Yeah, it's very contractionary
and has been. For the last 2 years.
Yeah.
And with no end in sight, because every time it shows up somewhere, boom, that city's on lock.
Yeah, but I mean, isn't it also kind of odd that it conveniently helps them in whatever debt cycle that they're in?
Well, they're stuck
isn't that weird?
I mean, China's stuck in a pretty vicious debt cycle if you really want to think about
it. I know, but isn't that weird?
Not necessarily at a national level, but at a regional, at a business level. Well, think about it this way. Evergrande was in a vicious debt cycle.
I mean, more vicious than Sid Vicious. That was vicious.
Or as Freddie Mercury referred to him, Simon Ferocious.
Oh, nice.
To his face.
To his face,
yeah, by the way.
Literally to insult Sid Vicious. Yes, that pissed him off.
So much. And then they closed the door in Sid Vicious's face.
Yes.
Went back to recording.
Yes, exactly.
Freddie.
I can't believe you know that. That's great.
Absolutely. One of my favorite stories out of rock and roll.
Okay, you are officially the more gracious host for knowing that story.
Well, the VIX too,
and the VIX too.
China's
the debt cycle.
Yeah,
the vicious debt cycle.
Their local governments have huge debts. They issue huge bonds to raise money to expand infrastructure and other government spending, and then it doesn't necessarily pay itself off, but it pays for economic expansion, so they can book economic expansion. It shows up as GDP growth, but they have to repay the debt at some point, and so instead of actually becoming cash flow positive like a business would need to be, they just issue more debt.
Well, technically it's still cash flow positive because it's cash flows, but not from operation.
But not sustainably. It becomes that from an investment standpoint,
financing
from a financing standpoint. Really, if we're going to talk about this from accounting, not from an operational standpoint, which is an issue because your operations are what theoretically need to sustain your operations.
Yeah, I mean, think about what a business is supposed to do. They're supposed to be operational. Their operation is supposed to generate the revenue and the profits that sustains the job.
Yeah, and then investing is to acquire longer term things that are used usually in operations, but that aren't directly being used in operations. Like a building where you store your vehicles
to help you grow at a faster rate than you normally would have,
or become more sustainable in certain areas. And then financing is to allow you to expand faster than your operational cash flows would otherwise allow you to.
Right, exactly.
But still within what your operations can support.
Yeah.
So that's a problem. And then you're also seeing it you see it in a huge number of Chinese industries. You're seeing it now, I guess, in their light rail, their high speed rail. So their rail system has gone kind of this week. They said it was about $900 billion in debt.
Yeah, which is what
5% of China's GDP.
No, $900 billion is at least 10% now,
including the bonds. So that was just.
Wow, I thought China's GDP was about $9 trillion. So $900 billion should be about 10%.
14.72 trillion in 2020.
What? That's 2020 though. I mean, tell me it's bigger now.
Yeah,
you can't do it. Yeah,
they were closed for 2020
and then
half
of 2021
sort of reopened up.
So here we go. I found it. This is saying China's GDP is 17.73 trillion. I don't believe that. The World Bank. I'll
be honest.
This is World Bank data. So I don't believe the World Bank. This is weird.
The World Bank. I have to imagine the World Bank is using Chinese data.
And
I'm not sure if you figured out the problem, but it's the same country, the same people that said there's no health crisis here as they were shutting down provinces. There's no health crisis here as they were building emergency hospitals and buying up huge amounts of personal protective equipment. And then finally, once they'd cornered the market and had everything they thought they needed, they went, actually, there's a health crisis here.
Yeah, so it's funny. It's funny how everything seems to be so convenient for China.
Well, their numbers are always convenient. Yeah, I mean, they're not doing well.
No,
I mean, between that, they've got that issue. They've got the fact that they have huge amounts of hidden debt. One of the things I saw too was they decided that they're going to forgive 23 interest-free loans to 17 different African countries and redirect 10 billion of its IMF reserves to nations. Okay,
nations in Africa.
Maybe this is them figuring out that the iron fist version of diplomacy doesn't work and that soft diplomacy is better. It may also be that those loans that they'd issued were based on speculation for future raw material resources, and that those speculations didn't pan out. So they're like, there's no way they can get paid back. Let's just get rid of it because there's nothing to see. It's not like we're going to take the port in Sri Lanka. It's not like we're going to try and take a major port in Kenya. It's just them going, well, there's nothing to be had here, so let's just
there's no copper here. There's no bauxite here.
Yeah, let's just go. Let's just go. There's not even a point in trying a coup, try and get our money back. Let's just leave. You know, Guinea. But the hidden debt is a real economic problem. Yeah. Economically, that's an issue. That you've got companies that can't exist without debt and that have no way legitimately of repaying that debt. Yeah. But the next problem they've got is how many Chinese companies are going to have to delist from U.S.
Yeah, well, and that's the funny thing too.
Because they had 5 last week. Yeah, that had to go.
Yeah, so Baba just recently, which is I think at one point, I don't know if they still are, but at one point they were the biggest Chinese company that was traded in the U.S.
They might still be the biggest traded in the U.S., but Alibaba has lost something like 40% of its value in the last 2 years.
Yeah, I know. But like I'm also saying, like, okay, if you're the biggest Chinese company traded in the U.S., that should put you high in the running for the biggest Chinese company. Period. You know, so today I think it was today. Baba, it was either today or yesterday, but Alibaba got listed on the Holding Foreign Companies Accountable Act list, the HFCAA list. Yeah, and normally, like if you have a company on that list, well, you're probably, unlike Scotch, running into liquidity issues.
Yeah, so the whole premise of the HFCAA is that. Look, let's be fair. Mm-hmm. In a purely capitalist system, you let anyone list anything on the exchanges, and if things go wrong because that company's lying to you, oh well, that's capitalism, baby.
Yeah.
Like, in the purest sense, in capitalism, a Ponzi scheme is fine.
Yeah,
it's actually.
I mean, there's a lot of things in the pure sense of capitalism. There's a lot of things like, I mean, honestly, drug dealing. Pure sense of capitalism.
Also great.
It's also go ahead. Yeah.
Yeah. It's a
pure sense.
Well, in that case, right? it's a legitimate market.
Right.
It's not necessarily a legitimate market, but it's a legitimate market.
Right. I'm saying like the racketeering side. If you take away the racketeering side and the extortion side of drug dealing, right? You know, like it's a legit business, right? You're selling a wanted good to a willing buyer. That's capitalism.
It's pure capitalism. Right? And on top of that, well, the next thing is, think about this. Capitalism is simply
totally free trade.
Yeah, it's totally whatever. If people don't want your product,
then they won't buy it. Yeah,
it's all dollar votes. So people are buying your product and they know what you're doing to make this product, and they keep buying your product. They don't care that you're doing it.
That's capitalism.
But again, it's capitalism. That's why we have laws and we have restraints on capitalism, right? So
of course, yeah,
right? Unrestricted capitalism is a bad thing.
Yes,
because that's where you get to the point where it's like, oh, insulin. How much money do you currently have?
Yeah, I mean, I don't want to deter anybody. I am a capitalist. I'm not a pure capitalist, but I'm a capitalist.
The market obviously requires restraint because it doesn't have it. It does not have it itself. Human beings don't have it, so we have to restrain.
Yes,
right.
But back to the HFCAA. So why does it exist?
Because in the U.S. you have to follow specific laws in order to be a publicly traded company, and one of those very, very critical things is that you have to be audited once a year by a legitimate accounting firm that is able to perform an adequate audit of your firm. Right. Yeah. So if you're Walmart or Berkshire Hathaway. You probably need one of the big four. You need a major accounting firm. You need one with a huge number of audit associates, CPAs, and a large number of junior, senior,
a lot of manpower.
CPAs that can actually sit here and really run through. Yeah. That can look at everything and really run through the numbers. Right. Mm-hmm. If Walmart went to a strip mall CPA, I would have concerns about the validity of their books.
I don't care what rate they're going to offer.
If you're a private company, you only need to be audited, I think, once every 4 years or 5. It's not every year. And that's only because there are a lot of tax things that are going alongside with your audits. They just prove that this is true.
Well, and let's be honest, like the HFCAA, I think, was really because there are a lot of publicly traded companies that there really isn't that much transparency in their books, in their K1 filings. Is that the letter number? The SEC K1 filings? The 10K.
Yeah,
I don't know how I
say
blanked
10K.
on
I was like K1. No,
sorry. I don't know how I blanked on that. I feel so stupid right now. But yes, they're 10K filings. But a lot of it was penny stocks. It started off with penny stocks. So a lot of penny stocks, a lot of companies that were trading the pink sheets, they couldn't trade anymore. It was liquidating only because this rule. I don't know if it was under the same umbrella as the HFCAA. It could be a different rule that's kind of similar to the HFCAA. But it's basically like, hey, your accounting statements. There's not enough transparency.
Well, they're not speaking the same language.
Yeah, which I think ultimately becomes the same translation as there's the transparency, we don't trust it, or it's not there.
Are these assets actually yours? Are these revenue statements correct?
Well, basically, it was just like the rule was put in place so that it's basically like you can't defraud investors. Like you can't defraud the people that want to own a portion of your company.
Correct.
But for some reason,
in China, there's historically been a position which is criminality for fraud stops at the border. If you defraud Chinese citizens, it's an issue. If you're defrauding foreign investors, that's fine.
Yeah.
So you saw this huge number of Chinese companies buying companies that are listed in the US, but that aren't, they're dead. Like they're gone. They're still listed, but they're not real. And then they would get themselves into that shell and they'd start like issuing fictitious financial statements
to get more cash,
to get U.S. investment dollars. And so long as they could keep showing this fictitious growth, stock price went up.
Absolutely.
And if you got it like a Ponzi scheme, if you got it at the beginning of that, it's great. You're holding the bag at the end. You lose everything because no one wants to buy a thing that now it turns out doesn't actually exist. And so that's what you're into. So the HFCAA says, you know what, overseas you can do whatever you want. We don't actually care. But if you want to be traded in the US, you must be audited by a major firm, by a legitimate firm to US standards, to Sarbanes-Oxley standards.
Nice.
So you must produce financial statements into Sarbanes-Oxley, and the auditor must audit your Sarbanes-Oxley books and sign off on them as legitimate. So you can show some guy in India whatever you want to show him. You can show the guys in Japan and China whatever you want to show them. Taiwan, same thing. But if you're coming to the US, you have to speak our language.
Sarbanes-Oxley, is that also kind of like transition for GAAP?
Absolutely. So GAAP, Sarbanes-Oxley. So the GAAP is the generally accepted accounting principles. Sarbanes-Oxley enforces a lot of that. Yeah. Is the enforcement arm.
Yeah. So I mean, all this is to say, HFCAA. I mean, China, I think they're going through some sort of falling out. I mean, we talked about the whole Chinese bank protest not too long ago with that story with QR codes.
Absolutely.
Crazy stuff, man. Crazy stuff. So I think a lot of people are really starting to lose faith in the Chinese government because of the protests.
Let's be fair. And then they're trying to lose faith in the Chinese government because of the Chinese government.
Yeah.
You don't lose faith in a government that's doing a good job. You lose faith in a government because it's doing a bad job.
Yeah, but also
or not doing a job.
Yeah, but also because if Taiwan, what's going on in Taiwan, like even the Taiwanese people are losing faith in the Chinese government, which like for the longest time, China has treated Taiwanese people very well. Like if you're an actual citizen of Taiwan, they treat you usually very well until recently. Even the Taiwanese people are starting to go like, ooh, I don't know.
Well, I think a lot of this is that there's a lot of internal problems in China, clearly. And you've got Beijing and Xi Jinping going, all right, well, let's ramp up our stuff for the domestic audience to show them, hey, look, we're going to bring Taiwan back into the fold. We're going to. Well, it's only because of Taiwan. It's just these issues.
I mean, that's a big GDP booster for China. I mean, that'd be really good for their economy.
Unless everything's blown up, and then it's not a GDP booster at all. It's a GDP sink for 10 years.
Yeah, but honestly, like I said last week, I don't think they care. Or did I say it 2 weeks ago? I forget when I said it, but I don't think they care. They want Taiwan. With or without the semis, they want Taiwan.
Oh, yeah, because then the problem, China's next problem is say they get it. Yeah. They won't. Let's say they do. The real problem is it's kind of like the U.S. when the Soviet Union fell. What do we do now? For the last 50 years, it's been, we have this. Yeah. Well, now that's gone. It's like, okay, well, now there's nothing to push against. Now I actually have to do something. I'm not fighting. Now I have actually build something. It's no longer I have to stop something. It's now I have to decide.
But then again, I don't know. I mean, China can always go into the debt cycle. So
they're already in one. It's not like they're exactly coming out of one. They're still in it very badly between their real estate. Yeah. And as we mentioned when we talked about that, is that people aren't paying their mortgages now. So if it wasn't good before, it's worse now.
Yeah, but I'm saying if they keep up this dovish sentiment, they can keep refinancing them. You know what I mean? Like,
well, until people don't want to buy.
Yeah, at some point they need some sort of other cash flows than that. But who knows? I mean, who knows how long they can keep up this vicious cycle for? Because it's China. It's not. It's not capitalism. You know what I mean?
I mean, they're looking at their next problem is they're looking at some more energy issues. They're not exactly
they're facing another energy crunch out there. I mean,
they're still. Let's put it this way: this summer they're still facing energy cuts. They still have blackouts. Rolling brownouts. Now there's this understanding that it'll be different than last year in that it won't roll into the winter. It should.
No. I mean, who knows? I think China might also get nat gas from Russia.
Well, yeah, but at the same time, their next problem is that just like the Hoover Dam, the reservoir on the other side of the Three Gorges Dam in China is also.
Oh, so they're facing a water crisis too?
They're facing drought, but if you're getting electricity from a hydroelectric dam, you've got a problem.
But
and while they may get natural gas from Russia, they don't necessarily have enough natural gas plants to make use of that immediately.
Right. But all I'm saying is Russia, they have been looking for another customer since March. So, now we're sitting here 6 months later almost. Like, you don't think there was another deal under the table with China? There had to have been one.
Well, Russia's also made deals with Iran and India.
Right, yeah.
Russia has been shopping different customers.
Yeah, but okay, but you want to tell me those countries have as big of a or as strong as a customer as the EU? They're not. I mean, China alone is a stronger customer than the EU, but whatever countries that they have been selling to, they've been looking to replace the EU with, guaranteed combined are not as strong as the EU.
Yeah, what I'll say is there's going to be a little less consistency in demand, and more importantly, there's going to be less reliability in payment.
Yeah, exactly. Whereas China
is going to pay.
Yeah, and China most likely will pay as well. So
but at the same time,
that's why I think Russia. I mean, I don't think they're that dumb where they're just going to sit on this giant nat gas reserve and be like, just keep building our reserves.
More importantly, they can't afford to.
Yeah, exactly. So I honestly, I hate to be pessimistic, but I think they're going to strike a deal with China.
They've already struck it. It's real.
And there were talks about it earlier.
As I look at it, you've got Europe, which is facing some very serious problems right now. We've got the EU and the dollar at parity, so they're trading 1-to-1.
Well, actually,
on the plus side, if you're Europe,
parity,
when it was at parity, if you're and as the euro trended down, if you're Europe, it gets worse and worse. But as the euro trends down, it's better and better for U.S. nat gas sellers because. You know that they're a market.
They're a market. But it actually doesn't get better for U.S. nat gas sellers. Because think about it. Like, if you're a U.S. nat gas seller and you're selling to the EU, right? So everybody thinks EU, like U.S. dollar at parity. Wow, go America. It was so great. America's better. It's called soccer now, right? It's not football, it's soccer. What you have to understand is that this is actually not good for the American economy.
Well,
sorry, maybe not.
Point, it's good if we're interested in. It's good if you're buying European goods.
It's good for imports.
As that drops in value against the dollar, you can buy the euro
strong dollar
less expensively than otherwise.
Yeah, strong dollar for a European product or European service. Yes,
exactly.
Normally, you go to the foreign exchange thing, the currency exchange thing, and you give them $10 You're expecting €9, but now you give them $10, you're getting €10, right? So, obviously that's good for imports, but for exports,
absolutely it's awful. Yeah,
if you're that American nat gas producer and you're trying to sell to Europe, that European buyer, the European customer
has less buying power.
Yeah, exactly. Yeah, they're used to going to that currency exchange and then going, hey, here's €10. Thanks for the $12. Now I'm going to buy $12 of nat gas. But now they're going to the currency exchange place or whatever it's called.
It's 10 and buying 10.
Exactly. So that's not good.
10 and buying 9.
Yeah.
And so as an exporter, it's bad. As an importer, it can be good.
But that's what I'm saying. Like, a lot of people are like, "This, go America, 1-to-1 parity. Thank God, let's all go vacation to eat to Europe, to France or whatever."
Which, maybe. Let's put it this way.
Actually wouldn't make sense.
As an importer of French wine, European and
Scotch.
As Scotch drinkers, we're happy. Scotch. Well, the real problem is that the Scotch is going to be with pound,
which is also weak. Which is also super
getting weaker.
Yeah.
So let's say our French wine and our German beer and our Italian olives and our Greek cheese. Yeah. So we're happy. We're getting more of their goods this way for better price.
Yeah. But the bad thing too is so the dollar index is strong. But it's only strong
because everything else is weak. It's not because of an underlying strength. It's going to go the other way when other places stop. When it stops being bad.
Yeah, but the Great Britain pound, the GBP pound sterling, that faced super high inflation.
Yeah, 10.1% last month.
Yeah, that's right. We joked about it last week when I said, okay, because the pound is so much weaker now, benching 315 is not impressive anymore, right? Remember?
Yeah. So benching 100 British pounds is only 90 US pounds. It's like, really?
Yeah, exactly. So, you can't be a sugar daddy with that. That's awful.
Dang.
But yeah, the pound to dollar now is 1.18, which I'm used to that being like 1.8.
Yeah, I was gonna say. Usually for me, my standard of where Forex is, I think of the pound at between $1.80 to $2.
Yes, $1.80 to $2.
The dollar.
Yeah.
Or
$1.80 to $2 for £1 sterling.
Yeah, one sterling gets me $1.80 or $2.
Yeah, not $1.25, right? Like $1.25 is euro. Yeah. It used to be euro stuff. The euro used to be 1.5, $1.50.
Yeah, exactly.
Right?
$1.50.
€1.
€1 got me $1.50. £1 would get me between $1.75, $2. And that's just kind of ballpark where I kept it. And that's just, I don't think that's the case anymore, one. And two, it's definitely not the case now.
Now, just to make it easier, €1 equals $1, roughly, give or take a couple cents. And £1, one Great Britain pound, £1 sterling, whatever you want to say, is about $1.25.
Yeah,
right?
so down
US dollars.
quite a bit from historical averages.
Yeah,
and
so
that's great if you're buying Scotch. Great if you're buying if you're importing European or UK goods. Fantastic. If you're exporting to those guys, which a lot of Americans are, I'd say more Americans export than import to those places, and that's problematic.
Well, I mean, no, I don't know though, because I think definitely actually definitely true, because Europe is much more of a service economy than U.S. because they don't actually produce anything. I mean, that sounds harsh, but they do produce things.
Well, the funny thing is, if you look at the U.S., if you really look at the U.S. in terms of our exports, we have more in common with a third world country than we do a first world country.
You're right.
We export a huge amount of raw materials. We export a lot of food. We export a lot of food. It's a lot of food and food products. Yeah. Now, why is that? It's because the U.S. has.
So we export some metals too. I mean,
but it's a lot of raw materials, and it's because one, we have a huge amount of natural resources. Two, we have had up until 2 years ago, an extremely efficient supply chain system. Three,
up until 2 weeks ago,
it's about 2 years ago, really. But we just have the ability to produce huge, and we're very efficient. We produce huge quantity food that absolutely exceeds the needs of the country. So what do? We export it.
But I mean, the EU is just going through all kinds of issues right now.
Oh yeah, they've got huge droughts. Not enough
farming crisis, a supply chain crisis, really, and the currency is super weak, and they have
a central bank. All that.
Yeah, and they have a central bank that is somehow like more dovish than the American.
Has any right to be. And
well, even we don't have that. Even the U.S., we shouldn't be as dovish as we are. And we talked about this.
I don't know when the EU put Lemony Snicket in charge, but they
did. They put Lemony Snicket in charge, and that dude is riding on doves.
And he's just going with a series of unfortunate events.
Yes, seriously, all I can say. Literally a series of unfortunate events. Great book series. And TV show and all kinds of stuff. But dude.
Yeah.
But remember last month or 2 months ago, I forget when it was, but Microsoft and Apple and all those big tech companies, their stocks plummeted because of the Forex risk. This is what it is. Mm-hmm. If you're trying to buy an iPhone and you're in Europe and you're a wholesaler in Europe and you want to buy an iPhone, what do you need to buy the iPhones with?
Well, you need dollars.
Yeah.
And what do you need to produce an iPhone? Well, if you're Apple, when you produce an iPhone, you need Chinese yuan and a lot of euros.
But
actually, more money gets spent on production of iPhone in Germany than in China.
Well, but let's think about it this way: the finished product versus the actual production of the product. Right, the finished product, the profit margins
are U.S. dollars. So let's ignore all the rest of it. Well, you need U.S. dollars.
But where are the margins? The margins are in the finished product, right?
Absolutely.
You take $17 worth of metals and all that kind of stuff, and then you produce a $900.
And that's why Germany does so well out of iPhones, is because they put together a lot of the electronic suite. Whereas China just assembles it, but Germany does actually.
But Germany and Switzerland, isn't it Switzerland too?
Switzerland may be involved, but I know that of all the places where money gets spent, the most money in the actual cost of production of an iPhone, the more money gets spent in Germany than anywhere else.
Right, but it's also because their labor is much more.
Even dollar value. All the technical skill is getting done in Germany, whereas just assembly is done in China. So well, but skilled versus
but by the way, Apple. One of the big concerns when they lowered their earnings guidance, I think it was 2 months ago,
was on risk in foreign markets, because as the dollar gets stronger, you can't buy as many phones, so it's harder to put phones into Europe. It's really harder to put phones into Africa. It's a lot harder to put phones into Asia, and so it's you're sitting at a point where it's like, well, I can't sell my phones.
Yeah.
I haven't raised my price, but everyone else has less buying power. So
here we are. Like a lot of people think the USD EU parity is a good thing for America.
And it is if you're importing. It's not if you're exporting. Let's put it that way.
So it just depends on which side of the fence you're on. But one more thing that I wanted to ask too about the US, I just kind of want to do a follow-up thing on the IRS crackdown or whatever it is.
It's not crackdown. It's not a crackdown.
I know it's not a crackdown, but I don't know why why was that language used?
The IRS is probably because it was Republicans and they don't like the idea of a regulatory agency.
Yeah, but it was a Twitter. I think I saw on Twitter the IRS crackdown. Whatever. It could have been a Republican pundit or Republican, whatever.
What I'll say is it's propaganda. That's propaganda. Probably. The fact that IRS has finally gotten a legitimate increase in funding so it can actually enforce the laws on the books. Here, before you ask your question, and this is what really pisses me off, and it's all when they're playing politics, but you get these people, the Republicans, who say, we don't need new laws, we need to enforce the laws that are already on our books. And it's like, okay, well, they need money to do that. No.
Right, okay. Because they hate government spending.
Because they don't actually want to enforce the laws on the book.
Yeah. Well, I hate government spending too, but I'm also very much a supporter of enforcing the law. It's kind of like Better Call Saul. You ever seen the movie, the show Better Call Saul, The Law is Sacred, right?
Oh, yeah.
I agree. The law there are laws I don't agree with, but I think the law as a whole is sacred.
Well, the great thing about the law is that it can always be changed.
Exactly. So that's also another beautiful thing about the law. But anyways, so the IRS, whatever the increase on whatever.
Yes, the increase in funding.
The increase in funding.
Increase in IRS
so a lot of people are saying that they're going to go after certain things like Venmo and all that kind of stuff. But what I'm also kind of worried about is like, so the industries that rely on tips a lot. So, I mean, like you, for instance, you work as a bartender. I assume a lot of your tips are in cash. I'd say probably, is it 70-30 still? Well, when I was bartending, it was about 70-30 credit card
you
cash.
know, at risk of these guys listening, there is an amount of cash tips that exist. And most people, you know, not me, most people in the industry do not report their cash tips for at time.
I mean, receive them. They were
because again,
I mean, they report it, but they don't report them in this. But they don't report them in the amount that, like, because if you get $1,000 in cash tips for a week, I mean, are you going to report all 1,000? I wouldn't. Why the heck would you?
Well, legally you're obligated to, and legally so discussing tax evasion is a bad thing. Now, what I say is this: you have two options legally, and this is as far as I'll go on this. You have two options when you receive cash tips. You can report them at the time accurately, which means that
if you get $1,000, you report $1,000.
You get on your check that payroll gets taken out. Or and here's your second option: when you're filing your taxes at the end of the year, you can report all your cash tips then. You don't have to report them when you earn them. You can report them at the end of the year. Now, at the end of the reason you wouldn't necessarily want to do that is because then you don't have any of the taxes held from those, and you then have to pay the relevant taxes on it at that point. But those are your two options. There are no other legal options, and I will not. And other than that, does tax evasion exist amongst auto service? Absolutely.
I mean, so that's more or less besides the point. I don't really care about that. What I care about is
I
know. I totally hear you. CYA, cover your ass. Yep. But so the IRS, and let's be honest, like they are trying to come down on
evasion.
On evasion, right? So if you report $800 a week in credit card tips, you live by yourself in a $2,200 apartment, and you have $800 in tips a week. Can you really afford that, right? So I think does that.
So are you asking? Is there going to be an increase in audit of people? And the answer to that is yes.
Yeah. So but that's what I'm worried about. Like, and I don't believe in tax evasion. Let's start by clarifying that. But
federal crime.
I agree. I mean,
So Al Capone is there going to be an increase in audits? Yes.
Yeah, but I mean, I'm saying like for people
but here's what'll be really nice. Complicated tax returns are 3 years behind on being processed by the IRS. 3 years. They haven't even gotten to the COVID problems yet, and they're behind.
Oh, wow.
So then think about all the people who have amended returns. Those aren't going to get seen until after actual returns have been processed. So you've got a huge backlog there in people's tax returns. That's one. That needs to be dealt. It's obscene that it's taking so long. Two, are people going to get audited more often? Yes. Are people who are living well beyond their obvious means of income going to get audited because they're clearly defrauding the government?
Yes.
Yeah. But if you're living within the means of what your income says you can live in, and you're not reporting all of your income, are you going to get audited? Probably not. If you really want to think about who gets audited and when, people get audited when they first start to make a lot of money or when they first stop making a lot of money, right? So if you, think about it, the IRS generally audits when you're a big person, when there's huge amounts of money in question, when you're making a very extreme audit claim. Like if you're making very extreme claims in your return, I live in downtown Chicago, but I own 3 acres of farm. We're going to have to look at whether or not that's true. But the big one is it's when you have wild swings in your income is when they're more inclined to audit.
Yeah, but
and the next thing is also, if you're earning less than $35,000 to $40,000 a year, there's really, I'm not saying they won't audit you, but I'm saying this, there's really no point. It's going to cost more to audit you than they ever hope to get back.
So that's what I was going to say is it worth their time to audit? Is another big
thing.
And
the answer, honestly, in most of the cases is no.
Yeah,
but if you earn less than $50,000 a year, there's no point.
Yeah,
there's really
and I'm not saying like is it worth their time to audit, because eventually, like if you are evading taxes, at some point in how they answer whether or not it's worth the time to audit you, at some point the answer will be yes if you are evading taxes.
Yes,
even if it's $5. But
at some point,
down the rabbit hole of that answer,
really long time.
Yeah,
yeah. When we've dealt with all the billionaires and millionaires who are evading taxes,
yes,
then we can worry about the guy evading for $5. But until
or for $500.
My battery is about to die, so I have to and I have to run anyway.
Okay, yeah.
But so as a whole, I don't think it's going to hit as many people. Now the Venmo stuff, there's some issues there. So one of the things, the warning I'll give, and it's not a warning, it's just like the hint, is that very clearly if you're Venmoing someone money, within reason for what it's for, if it's because someone else paid for movie tickets and you're paying them back, or if it's because someone else paid for drinks, just tell them, paying you back for the drinks.
In the description?
Or, in the description, just say, because you bought drinks.
Don't say rent.
Yeah, don't say rent. That's well, okay. Actually, do say rent if you're trying to take the expense. Say rent.
Well, if you're but if you are actually renting, say rent. But like if you're,
but if you don't make a statement, but if you're saying like, hey, no, this was because hey, you loan me $20 for letting me borrow money or whatever. It's boom, because then it's just he gave me money, I gave him back the money. It's not. There's no income.
Yeah, but I mean, I just think it's interesting because I just wanted to follow up on that because I don't know why, but I thought about that recently and I was like, wow, so like bartenders, servers, barbers, things like that, but also like this slipped into my mind too, strippers. Right, like a lot of cash tips there, and James, I am sorry, ladies and gentlemen, but I think we lost James. He literally ran out of battery. He gave me a warning, so there he goes. I'm sorry to do this, but because James is out, because the more gracious host is out, I'm just gonna have to cut it off. But hopefully, this IRS crackdown, if you want to call it that, hopefully doesn't get to you. You know. My worry is that it will, but who knows? It hasn't happened yet, so I don't want to get too pessimistic ahead of time, especially when it's not warranted. But yeah, with that said, really appreciate you drinking along with us. I've seriously really enjoyed every single dram with you guys. Hopefully you have enjoyed them with us as well. If you have, let us know. You can find us on social media at DRUNKUNOMICL, that's Drunkenomical, on Instagram, Facebook, and Twitter. Metaverse, Twitter, whatever it is, whatever your favorite social media platform is, you can find us there. We're always more than happy to hear from you. Slide into our DMs, comment on our stories, on our posts. We just love interacting and hearing from you guys. Additionally, you can find us on LinkedIn. I'm pretty sure it's just linkedin.com/Drunkenomics, or you can just type in Drunkenomics on the search box. Find us on LinkedIn. If you want, feel free to add me or James. If you do add us and you say, hey, love Drunkenomics, love your content, whatever it is, love drinking with you, I'm for sure going to add you, just based on that alone. So yeah, would love to hear from you there. And on top of that, if you want some merch, if you want a hoodie, a black tank top, an even darker black tank top, or a black shirt, or a black dog bandana, they come in other colors too, but I just like emphasizing the black and the darker black because that's pretty much the only color that I wear. You can get some merch for yourself at Drunkenomics.myspreadshop.com. That's DRUNKENOMICS.MYSPREADSHOP.com. You can get some merch there. And on top of that, if you also want to buy us a drink, you can also join us on Patreon. That's patreon.com/Drunkenomics. Go over there and throw money in our tip jar and finance our next round of scotch. Any contribution to that is greatly appreciated. I know I speak for James on that one too, even though his freaking computer battery is dead. But yeah, I mean, who knows? Maybe this month you can pay for a new computer charger for James. Who knows? But yeah, really appreciate any contribution there. And like I said, love drinking with you guys. My encouragement to you is to please, seriously, play chess, not checkers this week. But most importantly, please stay drunkenomical. Cheers.